Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The USDA WASDE reports that were released last week were bearish for both corn and soybean, and wheat followed suit. As we can see from the charts, both corn and soybean continue to be under pressure, and right now we're just below a key support resistance level. Right now the December corn contract is trading below the 343 quarter number and currently is finding some resistance here. The market had a very big down day upon release of the report, and since then the market has trended down some. We are approaching volatility-based support, and so we can expect to see potential support coming in the near future, especially as we're approaching the Thanksgiving holiday. Right now, the corn contract is oversold, and so it's not unreasonable to expect some form of support, although the market coming in somewhere in the neighborhood of 329 is not unrealistic. 50% of the August 31st to the October 20th range comes in at 337. As you can see, the market, when it first actually touched it, found a little bit of support here, bounced up, and is coming back down a little bit. We can expect to see potential support coming in near 331 3/4, and below that, if it passes 329, 324 1/4 is probably about as far as it will go. If it breaks there, then we should see the market actually break and retest below 314, although we're very close to the Thanksgiving holiday again, and the harvest is essentially done. The March corn contract echoes a similar pattern, where we have 343 3/4 as key support. That's exactly where the market came in and touched. We have volatility-based support coming in right at that level here. And so we anticipate somewhere in the neighborhood of 343 to 334 is going to be key support as the market comes in. Again, breaking down below, we're probably going to see a potential retest or a break of previous lows or the previous October 31st lows. Although once again, because we're very close to Thanksgiving, I think coming into the holiday is going to make for a very good support area where the market can take off from. The 50% retracement range for the March contract came in at 347. And as you can see here, the market actually closed below once and then turned right back around and closed above and is retesting it again. A key level for this March contract is perhaps at 341 3/4 and going down to about 336 as well. Jan Beans has been having quite the time, and as you can see here, the pattern that's actually setting up is fairly bearish. The market came in and we made a slight double top against volatility-based resistance. The market came in and dipped and came back up again. We saw a very big down dip on the day that the WASDE report was released. The market then bounced up from there and then turned right back down again. And now we see this small little pattern here, which is a bearish consolidation, and breaking below these lows, especially if we break below our natural support level here, we anticipate the market potentially making a nice little run down to about 925. That's going to be very important as the market comes through here, as the supply is very big and the WASDE report for beans was particularly bearish. Last week, we discussed how intersection points in our chart can sometimes point to a turn where the market moves up and then turns back down. That's exactly what we saw here. The market came up into that intersection point and is continuing to show some weakness on the way down. Breaking below key support here would be a clear indication of potential weakness. Additionally, we can see how the market here has found very good resistance up against this trend line as the market's making its march on the way down here. And so below current levels, what we'd be looking for is for the market to perhaps maybe bounce up against this red trend line and to find continued weakness if more selling pressure continues to come in. The key levels for the March beans contract at hand currently are at 1,005. And below 1,005, we're looking at 973 1/4. And if we get weakness below there, we then have 959.5, followed by 942 1/4. These are going to be our key support and resistance levels as the market makes its transitions. But above 1005, we can expect a bit of strength, and for the market to then make a move up to about 1047.5, or possibly in the neighborhood of 1036 and 3/4. One of the key indicators that we're looking at right now is the fact that the market is oversold, but that does not mean that the market's going to turn right back up again. As you can see, the market had turned oversold earlier in the year, where it first touched down. It had a nice little bounce up, but returned to weakness again and continued to be oversold for quite some time before finally being able to garner some strength, where it then came back down and retested the lows. Now, this movement that we see here is potentially an accumulation phase. And what that tells us is if the market actually is able to hold this 973 and change number, after the sell-off that we see here going into the holiday season, this could actually make for potential support where the market would be sideways to slightly up. And our next key pivot point then is going to be early next year, about January 10th. Prior to the January 10th date, we also have the Monday after Thanksgiving as a potential inflection point. And so this is where we can see the market actually make a slow decline going into Thanksgiving before we can see potential support come in. 2 standard deviations below the point of control for the week contract sits at 397.25. And this area has actually been very important for this contract for quite some time. We're currently testing this area right now, but what we are also noticing is the weakness that has come in. After the market came in and looked to potentially be moving up, the recent news really pushed the market back down again. And right now we're posed to potentially retest previous pivot lows down at 386 and 3/4. Current levels that we're sitting at right now are still very important. And so over the next few days, we'll continue to monitor its price action. But what we do like right now is the fact that we're coming in over the next couple of days for another inflection point for this contract, which could mean the very end of this downward movement before we turn back up. But what's going to be more important for us is as we look at this potential inflection point where the market comes in, is for both time and price to actually square out. And what we mean by that is it would be more important for us to see this time come in with a very important support or resistance level coming in to help confirm whether or not this is going to be a very important turning point for this contract as it comes in. It's also worth noting that the December week contract is also oversold, and so it remains to be seen whether or not previous lows will hold up as good support or not, as the market is inside of a very small trading range today, inside of what we saw from yesterday. And so it's going to be important to see how the market reacts against key support and resistance. A line in the sand level that we have for the March week contract is 402. In our experience, our analysis tells us that this contract perhaps wants to touch this level before coming off the board. In doing so, we also believe that getting much lower than 400 is going to be difficult. And so as the market gets closer to this number or to this area, once it touches this 400 to 402 area, should it get there, we think that's going to be a very good buy opportunity for this contract. Also, over the next coming days, if the market actually is able to pause near 409 and turn back up, it could very well be good support. And from there, we could see it actually trend a little bit sideways going into Thanksgiving. And then from there, perhaps see a nice little move to the upside. 2 days ago, OPEC members have been in discussion about the November 30th meeting. And from there, they'll be discussing the possibility of curbing production and flattening or stabilizing prices for crude oil. From there, crude actually has been able to move up after touching key support at 43.57. The market has then consolidated there, broke through marginally, had a nice reversal, and has since turned back up again. We still think the market could very well hit resistance somewhere in the neighborhood of 47.62, and from there could turn back down. And it's not unlikely for the market to come down and touch or retest that 41 or 40 number that we talked about previously. But as you can see, crude oil has had a very nice run to the downside, and we continue to be somewhat bearish as we approach that November 30th OPEC meeting to see what they reveal there. Thank you once again for joining us for our weekly market update, and look forward to touching base with you again next week.